After the sharp sell-off on Thursday, U.S. stock markets managed to stabilize toward the end of the week. However, uncertainty remains high, especially regarding the hot topic of tariffs. At Wall Street, the market calmed down after the tech sell-off on Thursday. Investors remain nervous, and the major indices fluctuated between gains and losses throughout the session. However, a wave of buying interest emerged late in the trading day, pushing the indices higher and allowing them to close near their daily highs. Although the NASDAQ 100 was only able to partially recover from the sharp losses of the previous day, it managed to end the day up 1.62% after a volatile session, temporarily halting Thursday's steep decline. The heavy sell-off in Nvidia stock had dragged down the entire tech sector, particularly semiconductor stocks. As I already mentioned in episode 6, my idea for Friday was to look for long entries. In this video, I'll show you what happened with my Dow Jones long trade and whether I also opened another position in the NASDAQ or S&P 500. First, I want to go over my Dow Jones trade that I entered pre-market on Friday. I opened a long position at 43,370 points, based on the market structure of the past few days. Since February 21st, the market had formed a range between 43,300 and 43,900 points. This range was initially broken to the downside, but the move was quickly countered, indicating a lack of further selling pressure. At the same time, a bullish engulfing pattern formed on the 4-hour chart, signaling that the bulls had regained control. Based on these signals, I decided to go long at 43,370 points. The trade started off very well, moving up to 43,600 points. At that point, I decided to trail my stop loss to 43,279 points to minimize my risk. The reason for this was that we were still in an overall downtrend, meaning the market could at any time resume its downward movement. That's why it was important to me to protect my position and ensure I didn't take on a larger loss if the market turned against me. As is often the case in trading, the lows were tested again, and I was stopped out at 43,249 points at exactly 1:49 p.m. Shortly after, the market rallied strongly, and the trade would have played out perfectly if I hadn't moved my stop. As a result, I had to record a loss of 91 points, which amounted to a loss of $455. So, was it the wrong decision to adjust my stop? In hindsight, you could say yes. However, I still believe it was the right decision, as we were trading within a downtrend. In trading, it's not about timing every trade perfectly, but rather about managing risk and staying profitable in the long run. In this case, trailing my stop cost me a potentially great trade, but that's just part of trading. Sometimes everything works out perfectly, and sometimes it doesn't. But that's the game. Now let's take a closer look at the NASDAQ 100. Here, we had a support zone around 20,700 points, which I had marked in purple. My idea was that the market would briefly drop below this zone, triggering stop-loss orders from buyers who had secured their positions. I expected a short-term bounce and wanted to check after the U.S. market open at 9:30 a.m. whether I could find a good intraday setup for a long entry. To analyze this more closely, let's switch to the 5-minute chart. Here you can see that the market initially moved sideways, then tested the lows again before starting an upward movement. Based on this development, I decided to go long at 20,600 points. The market initially started off well and moved higher. However, it retested the 20,500 point area before continuing its upward movement. Similar to my Dow Jones trade, I also trailed my stop loss here, setting it at 20,551 points to limit my risk. Unfortunately, this led to me being stopped out before the big move to the upside happened. As a result, I took a loss of 49 points, which amounted to a total loss of around $200. In hindsight, it's frustrating, because once again, the The market rallied strongly afterward, meaning this trade could have been another solid winner. But that's part of trading. Sometimes everything works out perfectly, and other times you just barely miss the big moves. After being stopped out twice, once in the Dow Jones and once in the NASDAQ 100, I was able to find a good entry later on Friday afternoon. This time, I decided to go long in the S&P 500. The reason for this was that a morning star pattern had formed on the hourly chart, which is a bullish reversal signal. As the market moved back toward the daily highs, I entered a long position at 5,905 points. The trade took off immediately, and the market continued its upward movement. By the Friday close at 5,957 points, my position was already 52 points in profit, resulting in an unrealized gain of approximately $1,300. My take-profit target is set at 6,000 points, as this represents the next key resistance zone. That's where I plan to secure my profits. I'm curious to see how the markets develop next week. The trade has started off very well, and we saw exactly the strong reversal on Friday that I had anticipated on Thursday. Unfortunately, I wasn't able to execute this move perfectly in the Dow Jones and NASDAQ, as the market retraced, and I moved my stop loss up too early. The main reason for this was that I was trading against the overall trend and didn't want to place my stop too far away. Had I simply kept my stop at the entry level, I wouldn't have been stopped out in either the NASDAQ or Dow Jones. That would have left me significantly in profit right now. But that's part of trading. Risk management always comes first, even if it sometimes costs a great trade. On Friday, I had 2 losing trades, but I was able to open another promising trade in the S&P 500, which I am holding over the weekend. So far, things are looking good for my 6,000-point target, as the upward move has been strong. I don't expect an immediate reversal, but as always in trading, anything is possible. If you enjoy this content, make sure to subscribe so you don't miss my trading updates. Drop a comment below and let me know how your 2024 trading year has been so far. Has it been successful, or have you faced challenges? I'm looking forward to hearing your experiences.